Good morning, everyone. I hope you are well. We are at the last day of the week. Today is Friday, 24th of July, 2012, and I would like to welcome you to our regular daily market outlook prepared by Windsor Brokers. We're going to take a look today in the lower the number of events that are due compared to yesterday's calendar, and of course the prospect for the movements in the markets during the Fridays. Usually Friday as the last day of the week brings some more action into the markets. Starting with the situation worldwide, the worries among the investors are increasing again about the global crisis, as this was signaled the best way on the crude oil and gold that eased from their recent peaks following strong weekly gains, with the euro again seen at the back foot at the beginning of the European session after moving in the quite narrow range during the Asian session, as the recent fresh high reached at 125.50 was at 125.90, just ahead of one psychological 126 barrier, was limited by descending 90 days moving average, and some easing is seen quite likely at this point. The comments from Angela Merkel and François Hollande on their yesterday's meeting presented a united front towards Greece, telling Athens it should not expect leeway in its bailout agreement unless it sticks to tough reform targets. Recall yesterday we mentioned that Greek Prime Minister Samaras was meeting the top Eurozone officials, trying to be a bit charming with them in order to get some loose conditions for the Greece, and it seems that quite a tough position of the Greek officials remains in place, saying that Greece should strictly follow their previously agreed rules in order to get the further money and to implement the complete bailout plan. From the other side, Spain, that is trying to lower its borrowing cost, is about to ask for the bailout. It's still negotiating details about this, so this is another signal of crisis spreading around. As said, the euro eased versus the dollar at the early hours of European zone. However, it's still well supported, and the downside is seen limited in the near term by the potential for the further unwinding of euro short positions. The euro was initially supported this week by Fed minutes, when the hint of possible further quantitative easing in the United States became more likely at this point, and this gave a great boost to the dollar opposite currencies as well as commodities, as dollar went sharply lower after this announcement. Fed officials say that they are still reviewing this as a quite likely scenario in the nearest future, with more clues to be given in the Fed's meeting at the beginning of month of September. As said, euro is currently in the consolidative corrective mode, but still off close to the recent highs. Similar situation with the sterling, but the technicals in the near term, are still more pointing to the downside, and still see the downside vulnerable for possible a stronger corrective action. Also, end of the week, that always brings position clearing, might see some longs cutting of the past week's stronger rallies, that increases possibilities of further easing, especially with the single currency and the British pound. From the other side, the dollar yen remains in the near term consolidating mode, moving within the narrow range of some 30 pips after hitting a low at 78.27 yesterday, with the downside still seen more favored at this point, as the pair lost some important supports, as well as dollar Swiss in the brief corrective mode after losing 9600 and dipping as low as 95.37. This was the high seen on yesterday's low, seen yesterday's afternoon, trading with some corrective action, now approaching initial barriers at 95.80, 96.00. Of course, more of all this we'll see in our technical part that will follow, and after this we'll have the questions and answers session where you will submit your questions, anything related to this matter, and I will be answering your questions. About today's calendar, as no major releases from Eurozone, we have only the UK's indicators starting at 8:30 GMT. Index of services for June expected no change, while preliminary business investment for second quarter is forecasted at 2.8, much more optimistic compared to the 1.9% in the first quarter release, and they revised the GDP for second quarter minus 0.5, a bit better from the first quarter's minus 0.7%. From Americas, only two releases today. Durables goods orders from US due at 12:30 GMT. Increase to 2.6% is seen in July compared to 1.6 in June, while core durable goods orders are expected also to move to 0.5% compared to minus 1.10%, giving some more optimistic outlook for the still weakening U.S. economy. From the technicals that we are all looking for, we're going to move now to the technical part and see what we can expect during Friday's trading. As said, Euro hit its fresh high yesterday at 125.88, and spent Asian session within the narrow range consolidation, being most of the time supported by 20 days exponential moving average, with some more negative tone emerging at the beginning of the European session, where the pair starts dipping lower. As said, quite a negative tone seen on the hourly chart, as well as 4 hour, where the conditions are still overbought, and the RSI is just emerging down out of overbought territory. See potential for a further corrective easing. Immediate dynamic support is at 125 zone, where it's also psychological support, and the 220 days exponential moving average on the 4 hour chart ahead of 23.6% retracement at 124.69. Previous highs at 124.40 are offering a good support, and basically, ideally, any deeper reversal should, any deeper correction should ideally reverse somewhere around at or above 124.30-40 in order to keep the near-term bulls and the rally of 123 zone in play for possible extension higher. We need to see the break above 126, 126.25 in order to resume the current short-term action, with the daily structure still being quite supportive, and the pair basically still struggling to clear the 90 days moving average that is currently at 125.60, with the break here and 125.93 that marks 38.2% retracement of the larger 134.85 down to 120.42, seen as a trigger for a further extension higher, and preventing basically pair from further sliding, as the larger picture's downtrend is still quite visible, as the pair dipped from the beginning of 2012 from the levels of 134.85 to 120.42, bringing a risk of further extension towards very important 120.00 and 118.75 lows. For now, the daily structure has improved, and more potential is seen towards the upside, with the trigger seen above 126, 126.25 to open levels at 127 and above. The British pound is also in the near-term corrective mode, following yesterday's extension up to 159.11. This was the highest level traded yesterday, with the 158.50 zone so far holding the downside, but quite negative tone still on the hourly chart, and the 4-hour structure being close to actually moving down of the overbought territory. Again, not rule out some stronger corrective action. Overall picture remains quite supportive and bullish. However, the clearance of 61.8% and the round figure support at 159 zone are seen as a trigger for further extension, as the pair recently broke above very important 200 days moving average and the 2 months range top that is now opening way for a stronger recovery of 163 to 152.76 descent. On the downside, I said the 20 days moving average at 158.25 offers initial support along with the 158.00 round figure support, and 157.66 the previous peak, basically 157, I do apologize, 157.80-60 zone as the previous range top should be ideal ideal level for reversal on any deeper corrective pullback in order to keep this bullish structure in play for possible further extension higher. I would say loss of 157.80, 157.60 would sideline the short-term bulls and bring the pair back into the range, while a reversal above these levels keeps the bullish structure in play for possible extension through 159. That will open next a very significant barrier and psychological barrier at 160.00. And as said at the beginning, the dollar yen is in the narrow range consolidative mode after hitting 78.27. Better seen on the hourly chart. The pair nearly fully retraced the latest 78.15 to 79.65 rally, where the descending 90 days moving average basically capped the upside as a brief break above this limit was seen as false, pardon, as well as 200 days moving average false break as the price quickly slid below, and the brief break below the broken main bear trend line of 84.08 would signal a full retracement and a possible test of 78.15, 78.00 base and a very strong support. Ability to hold above 78.15 and regain of minimum 79 level, that is approximately 30, that is seen as a trigger for further gains, would avert immediate downside risk. So far the negative tone dominates on the lower time frames. However, the hourly studies are now attempting through their midlines and seeing potential for a stronger recovery. Immediate dynamic barrier 78.73 is the 55 days exponential moving average, break above which to open next barriers 78.80, which is 38.2% retracement, and the 50% retracement at 78.96, basically break above 79. That marks also 61.8% retracement will again bring the upside in focus and avert immediate downside risk. Any failure under 79 would increase the risk of fresh weakness and a possible revisit of very strong 78.15, 78.00 support, and risk further extension basically of the larger downtrend of 84 to a 17 peak of a high of 2012 posted on 15th of March 2012. Basically today's closing above 79 in case of regain would be quite supportive. And the dollar Swiss also in the near term consolidative corrective mode following extension down to 95.37 after losing some important supports previously during the week at 97.00 and 96.55, extending its corrective short-term corrective action of 99.70 peak of 24th of July 2012, and turning focus towards the downside as brief break below 95.65, the 90 days moving average on the daily chart, seeing potential of revisiting 95.00 as round figure support, and also significant 94.61 low of 29th of June, and higher base at 94.20, 18th and 19th of June, double bottom. The near-term action is now pointing, the indicators are pointing higher, and see potential for some corrective movements. But so far this will be seen as corrective as long as first stronger barriers at and above 96, limited on the downside by 96.20, and the upside by 96.60 are intact. This is also the 50% retracement, and I would say lift above and 96.50, 96.80 is required to prevent further slide and bring some more positive tone into the picture for possible revisit of the upside levels at 97 and 97.66, 71 previous peaks of 20th and 17th of August 2012. We are talking about these levels here. However, the overall picture is still quite negative, and small. This is just a small part of the broader downtrend from 99.70, and not much of the action on the larger picture is seen unless 98.00 is lower top posted at the beginning of August is regained. So more downside risk at this point, seen as a negative sentiment is dominating on the daily chart. And as we said at the beginning, the crude oil is in the near-term corrective mode after posting its fresh high at 98.27. I would say at this point this is still seen as a corrective action, as larger picture structure is still positive, but overbought conditions see potential for some corrective action. From one side, again, growing fears about further slowdown in the major world economies as crisis is threatening to spread further, are keeping the investors' caution with the trading energies, as of course the more spreading of the crisis, deepening the crisis basically, with the signal lower demand for the energies. From the other side, the supportive elements are well known. First, the North Sea's disruption in the production in the North Sea due to the maintenance and some technical problems, and as well as the burning problem of the world currently is the conflict in Syria, and of course the conflict still, I would say, still verbal between Iran and the West regarding the nuclear weapons. So these are the two sides that are pro and contra the growth of the oil price. I would say at this point that personally I expect more higher prices of the oil as oil producers see potential for further major oil producers see potential for further extension of the oil price, as they said that $100 to $120 per barrel is ideal level for them, and I would say at this point deepening a crisis in the Middle East and the Gulf would be as a good prop for the oil prices, and current movement at this point seen just as corrective. Of course, false break above 200 days moving average sees potential for some stronger correction, as indicators on the daily chart started 2 point lower, and we can see some important static supports such as 93.22 previous high of 19th of July, and the low of 91.70 10th of August, the low where any stronger dip should be contained. Otherwise, loss of these levels would be quite risky and would allow for a deeper reversal and corrective action of the crude oil. The other levels to watch as Fibonacci levels at 23.6 is at 93.31. This is basically the peak of 19th of July 2012, and 38.2 90.25 with the 90 days moving average seen there. Ideally, any deeper reversal should be reversed at these points. Still, our main upside target remains at $100 per barrel and seen as a target in the short term. And finally, look at the gold that is in the brief easing after hitting fresh high at 1674, registering very strong weekly gains. On the daily structure, the situation remains positive, but entering the overbought territory sees risk of some corrective easing after the pair broke some very important levels and emerged above 200 days moving average with initial barrier at 1671 being cleared so far ahead of 1679 and 1689, which marks 61.8% retracement ahead of round figure resistance at 17, round figure and psychological resistance at 1700. This point, the hourly structure is pointing, all the studies are pointing lower, and they see potential for some stronger corrective easing. Initial support, I would say at this point, is 1656, reinforced by ascending 55 days moving average, and ideally any dip should be contained at these levels. However, further easing not ruled out down to 1650 and 1640, while loss of trendline support at around 1633, where it's also near the 61.8% retracement, and the top of the previous range would be quite risky, as it would turn the put the short-term bulls aside in favor of a deeper reversal. Still corrective, the current move is seen as corrective, and more focus is seen towards the upside. Of course, as mentioned at the beginning, end of the week, clearing positions might trigger some stronger movements lower, as the investors were mainly long gold during the past week. As a result of this is seen the latest rally that cleared some very important levels and emerged actually above the recent range tops to open way for some stronger recovery and basically prevent yellow metal from sliding towards its critical support at 1520, 1530 zone. That was all for today, Friday, 24th of August 2012 from our side. If you have any questions, please submit them now. Okay, it seems that we have no questions for Friday. Again, I would like to ask you for a feedback. You can see at the beginning of the session or on the registration page, you can see my email. Please, any feedback would be very useful for us. We would like to know whether you are satisfied with this. I would like to rate it to give us points that you would like to change or to add, anything that you think it's useful for you. We would be glad to change and to implement and to add some new services. That was all for today. I would like to thank you all for attending this session. Now, of course, expecting you back at the beginning of the week. On Monday, we're back at the same time, 7:00 GMT, 10 o'clock local Cyprus time. I wish you a nice Friday, nice and successful and profitable trading today. Of course, a nice and relaxing weekend, and we are back next Monday. Good luck.